Hey everybody, this is Jim at SP500chart.com. It's about 4:40 on July 10th, 2013, and we're going to use some time-honored techniques to try to understand these modern markets. And this is one of our featured daily technical analysis videos of the S&P 500 index. Before we get started, I just want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you should be making investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. Starting out here with a 15-minute chart, it looks like today was pretty much what we were expecting. We were not expecting to get above this green line right here, and we did not. We late in the afternoon or middle of the afternoon came up and tested that, but was unable to overcome that resistance. That's an expected thing. We momentarily did get over this neckline area right here, but just by a whisker twice, and then the S&P closed underneath the neckline. So what I'm going to make this a real short video because we went sideways. So what we talked about yesterday still goes for today. I just want to say that looking at this resistance line in combination with our proposed neckline and in combination with our back test of this lower green line that I will remind you was part of our bear flag that's set up in late to mid-June. So here's our top bear flag line, our bottom bear flag line, and remember we massaged this line just a little bit yesterday, and so far that slight alteration of that line, at least for today, seems to have been the right thing to do, because we've just got this nexus of resistance lines right in the low 1650s. So my feeling is that the S&P needs to back up. We need to back up a bit, come down, at least test this rising support line here that has been working since June 24th. And if this line breaks, no worries. I think if it breaks, we will likely be picked up and reversed at this orange line, and probably at that point come up for another test at this 1654-ish level. So you'll remember we're looking at what may be the formation of an inverted head and shoulders pattern. Now, if this is an inverted head and shoulders pattern, and it's not yet, but if it is, I want to show you what the features would be. Here would be our left shoulder. This would be our head. And then what are we missing? Well, we're missing the right shoulder. So if this does continue to serve as resistance, it will likely send the S&P back down into the lower 1600s to see where we find support there. I believe it will be found at this orange line, and I believe that we will then come up and retest this 1654-ish level, and if it breaks, we're looking for a move, say a nice move that would would have a minimum target of something probably around 1745, 1750, I think. I mean, we can measure it now, but it seems a little premature to do this, to be honest with you, because we haven't broken it yet. Actually, a little bit over 1750. So that's kind of what I'm looking for right now. The thing to keep an eye on if you're really short term is this channel between this support line and this resistance line. And when this channel breaks, if it is underneath our 1654 line, then I would expect a move down into the 1620s. So really, if we look at the chart on a 5-minute chart, I don't think there's that much to be gained. You can see there was that little spurt of activity after lunch, but it couldn't get over that green resistance line that, remember, used to be support. And kind of as an additional thing to look at, you can see that up until today, this move, this last little move up here off the bottom support line in this larger channel, that again, the channel between these two teal lines, we for 3.5 days were bouncing on a rising trend line right here. And I don't know that I had that line on the chart. I should have, but I don't think I did. And you can see that gave way today, but not in a tumultuous fashion. So that tells me, yes, indeed, resistance right up here around 1654. Let's see if we continue to sell a bit to test this rising support line. And if this breaks, let's see if we get picked up on this orange line down here. So really, I'm expecting a little downward bias, but nothing tumultuous. I would expect tomorrow to probably be somewhat down. But let's watch it just to make sure. And again, especially let's watch this teal colored channel, because I think this is likely to give us the best clue as to what may happen in the well, still short term, but short/intermediate term. So folks, there's your video for July 10th, 2013. Thanks for watching, and especially thanks for your support. Take care.